To Moneycontrol, you have tuned into IPO Watch and I'm your host Nikki Mirchandani. Today we are going to be talking about IRM Energy, a Gujarat-based city gas distributor company which is backed by Cadila Pharma as the promoter is preparing to launch its maiden initial public offering. It's aiming to raise around 545 crore from the public offer. And it's going to be issuing it 1.08 equity shares at upper price band. It focuses essentially on meeting the energy needs of the customers in their GAs through their pipelines and CNG station network put together. But to talk more about the company's outlook, we're being joined by Karan Kaushal, the CEO of the company, and Harshal Anjaria, the CFO of the company. Afternoon there, gentlemen. Let's understand how different is your business as compared to that of other city gas distribution companies in the likes of Gujarat Gas, Indraprastha Gas, Mahanagar Gas and Adani Total Gas. How different is your business model as compared to the other peers?
Thank you, Nikki.
Pleasure.
Our business model is fairly same as the other listed companies like Adani, IGL, MGL. But our USP here is that we are very good project implementation company. In a very short span of time of around 7 years, we have rolled out a huge amount of infrastructure in the city gas distribution operations. As on date, we have 66 CNG stations, more than 4,000 inch kilometer of pipeline, which for any company is a huge amount of infrastructure in such a short span of time. And we have licenses in 4 areas which are fairly different from these established companies. They are in the heartland of the country. We are in Banaskantha in Gujarat and Diu and Gir Somnath in Saurashtra. And we are in the state of Punjab also, Fatehgarh Sahib, where we are catering to an industrial cluster of Mandi Govindgarh. And last year, we have won a geographical area in the state of Tamil Nadu, which is Namakkal and Trichy. So we are not in the major metro centers. And we are in the heartland where the major CNG demand is right now picking up. So that is the upside about this company.
All right. I'm also going to ask you about how do you intend to utilize the proceeds essentially for your capex requirement. That's number one. Out of the 545 crore that you're planning to raise, I think more than 300 crore goes towards that. But lay out your expansion plans for us for the next 3-5 years put together. What kind of incremental capex would you require to support that kind of expansion plans, and how would that be funded? So that's 3 questions put together for you.
Okay.
Yes, to answer to your question on the capex plan, we are going to spend close to 307 crores in the Trichy and Namakkal GA itself, which is the new GA which was authorized to us in March 2022. And this will be 100% funded out of the IPO proceeds. In terms of infrastructure, we are going to create close to 6
All right, Mr. Harshal, I think
CNG stations in Namakkal and Trichy itself. And yes,
go ahead. You've caught you on a scratchy line, but please go ahead.
Yeah, in terms of infrastructure, we are going to create close to 66 CNG stations in Namakkal and Trichy over the period of next 3 years. Apart from that, we will also have fair bit of pipeline infrastructure in and around the Trichy and Namakkal area. We are already in the process of laying off pipeline network in the Trichy city. As we speak, in June 2023 Q1 quarter, we have already commissioned 3 CNG stations there, and the construction work at 7 CNG stations is going on, and it is at different stage of process. The CGS and mother station facilities are also under construction. LNG station hub is also being constructed in Namakkal. So we are really pushing our infrastructure in the Trichy and Namakkal GA. With respect to the other 3 GAs, we for the Banaskantha and Fatehgarh Sahib GA, which was authorized in 2016 under the 6th bidding round, we are almost through to the capex. So only the incremental capex will come there depending on the demand. For the Diu and Gir Somnath GA, which was authorized to us in 2018 under the 9th bidding round, we are on the initial 4th year of the MWP, and there is fair bit of capital expenditure which will come. But
so let's
at
talk
a company
numbers.
level,
let's
don't
talk
foresee
numbers.
any incremental capex to be funded.
Mr. Harshal, let's talk numbers in that case. Sorry to interrupt you. And First, Mr. Harshal, can you put a number to how much incremental capex need would you require in the next 3 to 5 years put together? You said that you're going to be funding in, of course, the incremental capex through internal accruals and not debt. But could you put a number to the expansion plan in terms of the capex requirement?
So in terms of capex, over the period of next 3 years, we are looking at anywhere between 450 to 500 crores at a company level. That includes the Trichy and Namakkal capex of 307 crores funded out of IPO proceeds.
Sure. Sure. Significant demand also comes in from CNG for a city gas distributor company. In your case, it accounts roughly around 50% of the overall revenue. How do you see this evolving, and what kind of CNG station networks you plan to roll out, if you can put in a timeline, cost involved and other things?
Yeah, right now 50% of our demand comes from the CNG segment. Like going forward, with the 66 CNG stations network, we will be having around 130 odd CNG stations by the end of FY27. And majority of the proceeds coming in from the issue will be invested in the CNG segment because it is a high margin segment for us, especially in the new GA, Namakkal and Trichy, where we will be rolling out our CNG station network on a fast pace. And in the additional GAs in Gujarat, where the CNG demand is always increasing in the last 3 to 4 years, we have been getting a double-digit growth in the state of Gujarat in the CNG sales volume. So we'll add up around 30 to 35 CNG stations in the state of Gujarat also. So this is how we are bullish about the CNG segment specifically.
Sure. Let's actually talk about your margin profile in that case. It's come down a little bit from FY22 to 23 to around 12% from 39.6% earlier. What kind of run rate can be expected going forward? In FY23, the margins were completely under pressure, I believe, due to the Russia-Ukraine war. Will there be any kind of impact that you're seeing from the current Israel-Palestinian war on the gas prices or the industry put together? How are you viewing that situation for yourself? Mr. Harshal, we can't really hear you.
Yeah, in terms of margin, FY22 was an aberration. The global LNG prices were at rock bottom. In FY23, the situation was reversed due to the Ukraine-Russia war. The LNG prices were at very high level. Since FY23, we have moved away from that situation, and the government also has intervened. They have announced the pricing guidelines, and that has helped CG sector in a big way. There is a visibility on availability of cheaper APM gas for catering the CNG demand, and that's why you would have seen all the CGD entities have improved on their margins in Q1. We also have improved in terms of margin. EBITDA per SCM has improved to 9 rupees per SCM as compared to 6 rupees in FY23.
All right, and going forward, what kind of margin growth are you targeting?
While we are not allowed to give any forward statements as per the SEBI regulations, but historically we have been able
Mr. Harshal,
to demonstrate double-digit EBITDA per SCM, and we'll try to achieve that thing.
So can we expect a run rate of 12% plus from what you've been guided? I mean, from what you've clocked in FY23, or you expect the number to be any different?
We historically have delivered a double-digit EBITDA per SCM, and we'll look to achieve that as we move forward.
Okay, let's talk about your competitive challenges. How do you intend to scale that up as compared to other peers? Your volume growth surely has been better as compared to your other counterparts at 30% growth in FY23. Why the standout number? Because I'm looking at Mahanagar Gas, Adani Total Gas, Gujarat Gas, and these are all in the range of 14 to 15 odd % for your company. It seems to be a little bit on the higher side. What explains that? What is the trend that can be expected going forward? And also, could you provide more color in terms of your volume growth?
in FY23, we saw significant volume coming in from Fatehgarh Sahib GA, which is PNG Industries hub for us. There are close to 400 industries. Majority of them are steel rolling mills. Because of this, they were using coal and petcoke and FO. The NGT came in and looking at our infrastructure, they banned the use of pollutant fuel in Mandi Govindgarh region, and we see a uptick in not only registrations but also volume. State government also recently has announced a fuel policy which has also cut use anymore starting from December 2023. So once this is also implemented, we are again looking at a good build up in the volumes. In terms of forecast, last year we did an average volume of around 3 lakh Fatehgarh Sahib, and this is expected to reach a level of around 6 lakh SCM in FY27. At a company level,
Harshal, I think we've completely caught you on a very scratchy line. I'm going to go back to the CEO and check with him as to what does he make out of the volume growth numbers, because we haven't really been able to catch up with most of the side of the statements that you're trying to make, but it looks like an interesting forecast that you're telling us about. Mr. Kaushal, would you want to tell us more about the volume growth? How much is it, 30% growth, and what kind of number can be expected going forward?
Yes, Nikki, this is a high growth company, right? From last 4 years, we have done a volume growth of more than 65% CAGR. And in the next 4 years, from the existing volume of average 540,000 SCM per day, we will triple these volumes. And by FY27, this company will be doing a volume of 15 lakhs SCM. So that is the kind of growth runway we are on. And majority of our existing 3GAs, they are still under penetrated, and the new GA which we have added is as big as our existing 3GAs. So at the end of FY27, 30% of volumes will be coming in from the new geographical area in the Tamil Nadu, and the 3GAs will be on the growth curve. It will be almost mature. But from then on, FY27 in the long term, still there will be enough room for growth in the volume of the new GA, which is Namakkal and Trichy. By FY30, we are expecting that we will be clocking in a revenue, or a volume of around 1 MMSCM, which is 10 lakh SCM from the Tamil Nadu GA. So that is the kind of growth we are excited about. Right.
All right. You said the CAGR growth in the next 3 years for volume would be how much? If you could repeat that number again for us, please.
In the next 4 years, we will be tripling our volumes. So the CAGR would be around 36-37%.
And how much was it in the last 3 years, if I may ask that?
Last 3 years, it was 65%.
Okay, so the growth, you're expecting the CAGR growth in terms of your volume profile perhaps to be coming down in that case, given your own analysis, like 35% compares to that of 60%. Have I got that right?
Yeah, ma'am, but in any company, in the initial phase, because the base being low, the growth is higher. But as we grow up, and in maturity stage, this CAGR number is going to taper down. That is normally how it happens with other CGD entities also. It's very difficult to maintain that high growth phase, but fairly compared to other peers, we will be still on a high trajectory of growth.
What is the scope for your industrial volume growth, given that your geographical areas are relatively smaller as compared to your larger peers? How do you intend to scale that up?
Fortunately for us, we are in a very intense area where the industrial penetration is very high. There is a industrial town called Mandi Govindgarh in Punjab, where there are around 400 industries. And we are in the middle of energy transition for these industries. This Mandi Govindgarh is one of the most polluted industrial cluster of the country. And out of the 400 industries, we have just connected 180 odd industries. So there are around 200 more industries who are yet to be connected. So the additional growth in the next 4 years will come in from when we connect these industries, and we almost double our volumes in this industrial cluster of Mandi Govindgarh. And also in the southern part, Trichy, where there is a huge anchor customer for us, which is Bharat Heavy Electricals. We'll be connecting them by Q4, and there are other ancillary industries. So it's not that if you are in a big city, then only you have the potential for industries. The industries are based out of a specific industry cluster, and we are very fortunate to have geographical areas where these clusters are.
All right. I have two more questions for you in that case, gentlemen. Any of you could take that up. The exclusivity period for Sakanta, if I've got that right, the geographical area, and Fatehgarh Sahib, that is the one which comes to an end in June 2023 and September. How is the business stacking up for those two geographical areas? And also talk us more about the areas that you're yet to explore or you've identified from where you'll be adding up the volume.
Nikki, we completely lost you. Can you repeat the question?
Sure. I asked you about your exclusivity period for Banaskantha and Fatehgarh Sahib. These are the two geographical areas where the exclusivity period has ended in June and September respectively from the RHP that I was looking at. How is the business stacking up from these two geographical areas? Has the demand taken a hit? How can one view at the situation?
Yes, ma'am. The policy permits for a new CGD operator to enter into these areas where our exclusivity has ended. But this has not happened as yet. There is no new CGD operators who is willing to come in our area. The regulation allows it. We have to give them 20% network capacity. But it is very difficult for a new operator to come in and use our infrastructure. Just for your information, that we have a marketing exclusivity which has expired, but the infrastructure exclusivity is still there for us for the next 20 years. So he has to rely upon our infrastructure and to do his sales and earn revenue. So that gives us a kind of a virtual entry barrier. So you can say that it's a quasi-monopoly, and we are in the coming future, we don't foresee any other operator coming in and asking us for network capacity and operate in our areas where our marketing exclusivity has expired. So though the regulation allows it, but it is,
Point well taken. Quasi monopoly, I heard that loud and clear from you. But let's talk about growing demand from electric vehicle. Does that affect your business? Does that affect your cash flow, if at all? How are you looking at the situation? Any changes that will come through? What's your view?
Fortunately for us, we are in the heartland, and we do not have any public transport which is operating in these cities. So the main risk of conversion to EV fleet is for the public transport. And in these areas, there are no buses which are applied on the public transport network. And this is an area where there is a more or less rural, quasi-rural kind of a background, and the EV penetration will take a lot of time, maybe around 8 to 10 years. And it will be first, the EV penetration will start in the major metro centers, and then to the grade A cities. But we are operating in a grade B cities where CNG penetration is on our price, and the EV infrastructure is very, very less. So that kind of risk we are not foreseeing over there.
Okay. So PNGRB is inviting bids for 7 geographical areas. What is your plan now, and how many of these GAs actually fit into your long-term strategy? What is your inorganic plan looking like? Talk us about it.
Yes, the last week only PNGRB came up with the next round. They have published the dates, and we are looking at these geographical areas. Although these areas are in the far-flung area of Northeast India and also Northern India, on a capex side they would be on a higher side. But we are looking at the details, and we will be aggressively looking at bidding for the area which are synergic to our northern GA of Fatehgarh Sahib. So this is an option we are looking at to add new GAs to our kitty. And going forward, we believe that this sector is in for consolidation, and we will look to acquire GAs nearby our existing GAs if they are on sale, and to add up to our number. We want to be at least 5 to 6 GA company going forward.
All right, last question before we wind it up. Higher gas prices because of the ongoing political concerns, does that pose a challenge to maintaining healthy margin profile for the companies like you? All right, gentlemen. Sir, we cannot hear you. Can you just unmute yourself? Mr. Harshal?
Strategically, hello?
Yes, go ahead.
Yeah, we have a strategically tied up volume of contracted RLNG to cater to the demand of industries and commercial, and we are not relying on spot volumes. The global LNG prices also have tapered down compared to the peak in March 2023, and will look forward to tie up any incremental requirement to cater to the demand. So we don't foresee any major challenge in terms of retaining our margins.
This issue is completely a fresh issue, and the company is backed by Cadila Pharmaceutical. The stakeholding is expected to come down post the initial public offering. What is the kind of promoter lock-in that you have?
So the promoters are currently owning 67.94%. Post listing, it will go down to 50%. As per the SEBI regulations, promoter holding will have a lock-in of 3 years, and 20% of the shares would be under lock-in.
All right, gentlemen, we'll leave it at that, and thank you for taking out your time and speaking to Moneycontrol. All right, with this, it's a wrap. Stay tuned in for more.